Hi everyone. Today we are going to talk about Policy Bazaar results, which was announced just a couple of hours back. So the results have been nothing short of a blockbuster. Is the stock set for all-time high? Let's see and go through the results. So before heading into that, let's look at the insurance sector as a whole in India. So the penetration rate of insurance sector is very low in India when compared to the global average. So it was at 4% during COVID era. Now it has come down to 3.7%, whereas in the US it is at 12%, and the global average is 7%, grew from 6.8% to 7%, whereas Indian insurance penetration peaked at 4.2% during the pandemic in 2021-22. Since then, it has declined, it has come down to 3.7%. So the opportunity size is extremely massive for Policybazaar. In my multibagger series video, how to spot multibaggers, I've mentioned about opportunity size. There is a video, you can go through it if you're interested. If the market potential is very huge, it is a sign of a multibagger if the management has the capability to execute really well. So in terms of non-life insurance, again, India's penetration rate is very low at 1%, whereas in the US it is 6.5%. So the opportunity is at $150 billion opportunity, which is massive. They only have made 5,000 crore revenue and they are a leader in the space. And if you look at 2030, it is expected to grow at a very high CAGR of 17 to 18%. And it is expected to cross $500 billion in another 5 years. So the massive opportunity is what is tempting me to look at this particular company, which is one of the top tech companies that is listed in India. Now let's look at the numbers released today. So the estimates were as follows. So the expected sales growth rate was 35.21%, whereas the profit growth rate expected was 125%. Now let's look at the results. In the results, revenue has gone up by 38% YoY to 101,508 crore, whereas profit has gone up 184% to 171 crore. So results are far better than even the estimates. So basically, Policybazaar results have beaten estimates. So let's look at the key highlights. So total insurance premium has grown at 48% YoY, lending dispersal 38% YoY, and at 20,000 plus crores. So core online insurance new premium is growing at 45%. Health insurance and life insurance new premium is growing at 48%. So revenue, as we discussed earlier, Q4 was 38, whereas for the whole financial year it is 45%. For the whole financial year, profit growth is from 64 crore to 353 crore. The margin has gone up from 2 to 7. Blockbuster results. And if you look at other things, right? So the premium, it has gone up, revenue has gone up. So the contribution percentage is also going up. What is interesting here is the EBITDA percentage. So EBITDA was at 6% last year. Now it is at 10%. So it clearly shows that the company is moving towards profitability. There is a clear path. So all these companies typically do not have profits. They do not have a lot of cash flows. They are not profitable. They are typically valued at their revenue multiples. Whereas if you look at Policybazaar, it got listed in 2020, I guess. Since then, it has come a long way. Let's look more into those numbers. So it has, since listing, its revenue has grown at 52% CAGR. Profit margin has grown from minus 58% to 7%. So this is where I came up with that video where I said, should you invest in loss-making tech companies? So this is how companies in US also do, and we also looked at those details in another detailed video about tech IPOs. There is a tech IPO playlist. You can go through it to get more details. So typically in US, companies take 3 to 5 years to become EBITDA positive. 3 years to become EBITDA positive, 5 years to become profitable. Policybazaar has achieved that. So in a period of 4 to 5 years, its margin has improved from negative to positive, minus 58% to 7%. And what is interesting here is this is a tech business. It does not involve huge number of human resources. Unit economics is extremely attractive because you do not have to spend a lot of money to scale from a product point of view, from a human resources point of view. Whereas for sales and marketing, you have to keep spending money. But overall, you can scale massively and grow your revenue. Market potential is huge, number one. Number two, profit margins. So the company is moving towards profitability. You can see here 1425, 833. You can see this here. So minus 833, 1425 versus sales. So it was listed. It got listed. I think it got listed at around 1400. I guess I don't remember. In between, it went to 400 rupees. That was when there was a massive opportunity. Now it is getting close towards 1800 range. Now the next year revenues keep growing. 2500, 3500. Now at 5000 crore. You can see that the losses have been coming down from minus 830, minus 58% to minus 19%. Last year 2%. Now there is a huge improvement, which is a massive positive sign to buy this stock and hold it for a long term. So let's look at more details. So based on the company's results and investor presentation, this is the key highlight from this particular year. So the insurance premium boom 48%, health insurance growth 48%. The most important and most attractive thing is renewal. So it means that they have been able to retain the existing customers who continue to renew their policies. So typically in these businesses, in tech businesses, it takes 5x more money to attract new customers in sales and marketing. Whereas it takes, so let's say if you want to get a new customer, it will take 3 to 5 rupees for you. To retain an existing customer, it will take you only 1 rupee. So basically, as long as you retain all your customers, as long as you upsell and generate more from revenues from existing customers, it is an extremely positive sign for tech companies. Again, another video, if you want to learn deep about investing in tech stocks and learning about how to value them, there is a separate playlist called Tech IPOs, so you can go through it. So renewal number is again a very positive signal. So renewal ARR is 817 crore. 42% YOY growth, which is massive. From existing customers, they've been able to get so much additional revenue with 80% margin. So this is the point I mentioned. So as you scale, there is a huge opportunity in terms of economies of scale. Unit economics work in your favor in these industries because you don't have to spend a lot of money, especially in the renewal aspect. So this is what I mentioned, improved unit economics, and EBITDA has risen by 131%. Margin improved from 2 to 7%. Cash reserves also stay strong at 5,406 crores. So let's look at the future potential. So this is a scalable business model. It is a high margin, tech driven marketplace. It is a clear leader in this space. So they can easily expand into tier 2 and tier 3 cities. So 90% of India's population is there with growing digital penetration, with social media, with internet, with geo. Everyone in India, right from tier 1 city to small villages and rural areas, everywhere the digital penetration has increased, which is why a company like Policybazaar, which is a leader, is clearly well positioned to reach deep and grow massively because the opportunity size is $150 billion, as I said. So India remains an underpenetrated market, even in life protection. So 97% gap in life protection, and 66 percentage of people spend out of their pockets when it comes to health. So in hospital, 66 percentage is paid by cash, only 34 percentage is cashless. So they are also doing a few expansions. We have to see whether this is successful or not. Sometimes diversification may work, Sometimes it may be detrimental for the company. They have launched a Policy Bazaar Middle East in Dubai. So we have to see if this works out in Dubai. And they have also done a capital infusion of 20 crore into PB Pay, which could be similar to our Google Pay, Amazon Pay. So let's see if this succeeds. But again, diversifying into too many places may not work. But they have cracked the code for lending and insurance. Maybe they are good at executing. So we have to wait and see about future expansion. Why the stock can be a good opportunity for long term? So the most important thing in tech companies like Bazaar is growth. Growth seems to be unstoppable. So right from the listing, it has been growing really well from a revenue point of view. The other aspect is profit. So profitability is clearly visible now. Execution is top notch. So the company is expanding its margins to 7% margin now. From minus 58 to 7 in 4.5 years is no easy achievement. So this is my personal opinion. The stock may continue to rally and may reach all-time high, especially if growth continues to sustain above 30 to 35% every quarter, every year, and if they continue to improve their margins. So this is how we value tech companies that are not profitable. This is a valuation given based on sales. So typically the median valuation is 8x for any company. Company has grown at 52%. I would give additional 3x. Profit margin has improved from minus 58 to plus 7%. So additional 2x. So free cash flow is improving. Yes, additional 1x. So sales efficiency is good. The retention is very, very impressive, which is one of the most important metrics. So additional 2x. They are a clear leader in the space. Everyone else is a follower. So I'll give additional 3x. So overall, I would value this company at 22 times sales, which is very reasonable for the kind of numbers they are showing. So in case if something goes wrong, the next few quarters, if margin goes down or if sales growth saturates, this multiple can go down drastically. So the current sales is around 5,000 crore at 27 times 5,000 crore. Sorry, at 22x. So this is 22x. It's like 1.35 lakh crore. This is the valuation it should be at. The current market cap is 81,668 crore as of today. So the current market price is 1778 based on this method. This method, we may have a target price of 2,400 from current levels. And the most important thing is this company is a good stock for a long term. You can hold on to it for super long term in your portfolio and reap rich rewards or the India's digital story, insurance story. Let's look at the charts. So in terms of charts, I'm looking at Ichimoku cloud. It remains bullish. It is above the baseline, and there is a green cloud that has formed recently. This company looks this company is already bullish. It has already gone up a lot. So it became bullish on 21st March. It continues to remain bullish. It may get to these levels, 2,200, which was seen during last quarterly results. So we may see a new high if the market rewards this really good result from this company. So this target price again, all of this is for educational purpose. So based on my valuation, I'm coming up with a target price. So do your own research before putting your hard-earned money into your stock. Maybe you can, since it is already bullish, maybe you can wait for a fall and purchase, or you can, if you want to buy and hold for long term, then you can keep purchasing it in a staggered manner. Uh, if you found this video helpful, hit the like button, subscribe to our channel. If you want me to review any specific stock or specific situation, you can post it as a comment. And if you basically have any questions or any specific thing that you want me to put a video on, please share it as a comment. Thank you very much. Happy investing.